Good day, everyone. My name is Margot Orr. I'm the Director of Policy and Government Relations here at the Greater Saskatoon Chamber of Commerce. The Chamber team, as well as many of you, are participating today from First Nations Treaty 6 territory and the traditional homeland of the Métis Nation. As a Chamber, we recognize the history of this meeting ground and the harms experienced by Indigenous people on these lands. To advance economic reconciliation and inclusion in our city and province, the Chamber has created a reconciliation roadmap for small business, a simple step-by-step guide that maps out clear, actionable steps that a business owner or operator can start moving on reconciliation in their business. We'll put the link in the chat here to our roadmap, so please feel free to visit and bookmark our new site and learn more to get involved. So before diving into our presentation today, I wanted to offer one of our new Chamber members, Elkridge Resort, a moment to speak to our members. So I'm going to pass it over to Ryan Danberg.
Thanks, Margot, and good afternoon, everyone. I guess just on behalf of Elkridge Resort and our Roots to Sask, which is our parent company that owns and operates the resort, as well as the Elkridge on the Lake in Waskesiu, we just want to say that we're excited to become a member of the Saskatoon Chamber, see great value and obviously lots of good things happening with the Chamber on many fronts. We're certainly look forward to networking with everyone over the course of the next little while. I've got Darlene Toletta here with me today, and she's our Director of Marketing and Sales, and we'll be the main face that probably lots of folks are going to see out at the Chamber functions and stuff. But we're excited to be a part of it, and look forward to many great things to come here over the course of these next few years, and also happy to see the topic today on the digging into Delta thing, because obviously that's a very important piece of our business that we see as a real important thing moving forward. So thanks for allowing us to join and have this opportunity, and we look forward to meeting several faces over the next little while.
Excellent. Thank you, Ryan, and thank you, Darlene, for joining us today. So let's dig into the topic at hand. In May 2020, US-based Delta Airlines announced they were suspending service to Saskatoon, eliminating many direct flights from American cities, causing disappointment and concern that there's no direct port of entry into Saskatchewan, affecting both tourism and business travel. So to provide some more insights into the feasibility of return to service, we're pleased to have CJ Dushinsky. CJ is the current Vice President of Service Quality and Business Development for Sky YXE Saskatoon Airport. CJ has been in the travel and tourism industry for over 10 years, bringing a strong background in marketing and business development with a focus on route and passenger development. CJ, thank you so much for being here. So the floor is yours. We'll pass it over to you.
Perfect. All right. So great. Thanks, Margot, for the introduction. My name is CJ Dushinsky. I am the current Vice President of Business Development and Service Quality here at Sky YXE. And today I'm going to be talking to you a little bit about our service with Delta, what we're doing to work on the return to service in Saskatoon, and trying to dig into the feasibility a little bit, trying to just provide some more information on really what goes into route development and business case development in working with an airline to reestablish a route or develop a new route into a market. All right, so there's a lot of content to cover today. I'm going to try to move through this fairly quickly. So I will ask that maybe you save your questions till the end of the Q&A section, just so that I can kind of move through the information quite quickly. And then we'll have some time at the end for questions and answers. So we'll start with a brief introduction. We'll talk a little bit about our market here in Saskatchewan and in northern Saskatchewan and Saskatoon specifically. We're going to talk about what the pandemic impact really was on air service, with a specific lens on transborder service and Delta, and where kind of recovery is looking towards. We'll talk about the transborder market and the transborder service for US overall. We'll dig in a little bit deeper into Delta, into that existing business case, and really what needs to go in that to make that feasibility of service return. And then looking ahead, so asking some questions to you folks that have joined the call, and what you can do to help support us in our efforts to regain the service from Delta. So as Margot had mentioned, I have been in the industry for a number of years. I spent the last 10 years working directly with airlines, specifically on route development and route marketing. So these are just some of the airlines I have worked with and been successful in achieving either a newly developed route or in working with them on marketing campaigns for route development, either here in Saskatoon or in my previous role at the Calgary Airport Authority. So we're going to talk a little bit about markets. This is what it looks like in terms of what we show our airline partners when we're talking to them about what is the potential market opportunity here in Saskatchewan. As you know, we do have some counterparts in Regina that do take a segment of the Saskatchewan pie, so to speak. So they are based out in the south. You can see in the blue, that would be the Regina catchment area. We're kind of in the middle there, that Saskatoon catchment area. And then of course, we were very proud to serve, be the gateway for our northern Saskatchewan and that northern Saskatchewan gateway. So when you look at Saskatoon and the northern market, our catchment area is really about 600, a little over 600 residents, capturing a little bit of leakage that we might get from Regina with some folks who may have in the past driven up to take the Delta flight. Really, we're looking at around that 600,000 passenger or market size that we're talking about when we talk to airlines. And that's really what we showcase in terms of our market. So looking into where we were in a pre-pandemic state, we were very well served for a market of our size. We're under 1 million people across the province, certainly under that in terms of what our market potential is. We had 13 domestic nonstop destinations in Canada. We had 4 to the United States, and we had 12 in Mexico, either nonstop or with a stopover connection, or sorry, not a connection, just a stopover routing. So we were quite well served for a market of our size prior to the pandemic. And so you can kind of take a look at what that total route map was like. We're going to come back to that in a little bit to talk about what it is today and what it looks like today in a few slides. I'm wanting to highlight here really of that market that we've talked about and of that, of those routes, how our market breaks down here in Saskatchewan. So in a normal year, when I talk about a normal year, we really tend to use 2019 as our baseline or last full normal year of operations. So a lot of the data that I'm pulling is from 2019. And we tend to pull things by summer and winter because those for us are 2 different types of, there's a lot of seasonality in those markets, and the types of routes and destinations typically do change with the season. And as you can see from summer 2019, what our mix looked like, we had almost 80% of our traffic. So 80% of everybody who flew in and out of this airport was flying domestically. They were headed towards a domestic market, whether that's Edmonton or whether somebody was coming from Vancouver to Saskatoon. We were dealing with 80% of our traffic was either destined or coming from a domestic destination. 13% of that traffic was US or transborder, which is what we're kind of talking about today. And in the summer, I kind of pulled out what those top summer markets are. Las Vegas, surprisingly, people still like to go to Vegas in the summer. So these are our monthly numbers. So Vegas is still a very popular destination in the summertime. Minneapolis, which is the route we're here to talk about today, was actually number 2 in the summer. And this is a very interesting piece because this is saying that those people are destined for that market. It's not that they're connecting through that market. This is people who are either going to Minneapolis and staying there, or people coming from Minneapolis and staying in Saskatoon. And what this really showcases to both me and an airline is that route has created market share, because without that route existing, there's probably not going to be that many people that are going to Minneapolis just to visit Minneapolis. So the route in itself has created that market for that base in Minneapolis, which is great to see. And that is a great selling point for an airline when they're looking at the market. And then kind of just rounding out the top markets there, Los Angeles, New York, Orlando, not surprising summer destinations, tourist destinations, places that people like to go and explore families in the summertime. Flipping over to winter, what we saw in winter 2019, you'll see that kind of split start to shift a little bit. So our domestic actually drops down to about 60% of total traffic coming through the airport. Our transborder or US market grows to about 20%. And you can see the kind of shift in the destinations that are happening. So over wintertime, Minneapolis falls down, out of the top 5, and it becomes Phoenix, Vegas, Orlando, Los Angeles, Palm Springs, where a lot of people like to go and golf or have other or secondary homes in Palm Springs. So you can see that between the summer and the winter market, that can shift dramatically. Our international piece takes up a larger part of that pie, and that's really because of all the sun destinations we have. Everybody in the winter wants to get out of here and go somewhere warm. So you can see that piece of the pie broadening there. So I'm going to try to take a little bit of a deeper dive now, and we're still talking about market, but looking at transborder, that market specifically. So that 13 to 20%, depending on the season, of people that are traveling through our airport that are destined for somewhere in the United States, or they are coming from the United States destined for Saskatoon. This is really how that market splits out. So of that 13 to 20%, how are they getting to the United States, or vice versa? How are they getting here from the United States? 10% travel through Vancouver, so not one of our largest connecting hubs for the US. 30% through Calgary, so most certainly one of our larger. 32% were connecting through Minneapolis, so that's the largest percentage of that pie, and 14% through Toronto. So really, there's 4 markets, 4 hubs that we're connecting through. 3 of those are domestic hubs. One of them is a US hub that we're utilizing to get people from Saskatoon into the United States, or those based in the United States to Saskatoon. And those are the main 4 hubs that we're looking at. Obviously, today we're zeroed in on that 32% of service via Minneapolis, and that's what we're going to talk about a little bit more today. Another piece that I wanted to really talk about when we talk about pre-pandemic and market share, and really where we were before the pandemic. And this is a little bit, I think, complicated, but I will walk you through it. This is really talking about seats per capita. So when I say a market is well served for their size, it means that there's a lot of seats in the market to serve the number of people there. Seats per capita is a good way to measure how we measure up against our other Canadian counterparts, other Canadian airports. How are we well served and compared to them when you look at it from a per capita basis? So what this is highlighting is, this is really looking at it from a domestic perspective. It's ranked that way from a domestic perspective. But what this is saying is that prior to the pandemic, we had 1.5 seats for every person in Saskatchewan. And you can see that ranked against Ontario, New Brunswick, and Quebec, we were ranked higher than them. So we ranked higher for those in Ontario for number of seats available for domestic opportunities, which is quite competitive. We're going to look a little bit at transborder, which is that lighter blue. So you can see, obviously, we have much less seats per capita when you're talking about transborder. But when you're comparing it across our other provinces, we rank very strongly compared to other provinces of our size. And then when you look at Manitoba, we're actually right on par. So we were on par with Manitoba for the number of US seats or transborder seats available to those living in Saskatchewan. So this just kind of paints a picture that we were a very well-served market for a market of our size in a pre-pandemic world. So now let's talk about the pandemic and where we need to go for recovery. So this is what our route map looks like today. You had seen what it looked like before, so there's quite a bit of a shift here. Domestically, we've all but recovered in terms of routes served. It's not to say that all of that seat capacity is put back. It's not to say that all of the frequencies have been put back, but for access to those routes, all of our domestic routes have been recovered, except for Ottawa, which was a trade-off with the new service that was launched during the pandemic with Air Canada to Montreal. So we lost Ottawa, but we gained Montreal, which is a much better connecting market for European hubs and European access. So a little bit of a trade-off there, but overall more beneficial to Saskatoon. And we have recovered our routes to all other Canadian markets. The 2 that I will note is that it is showing Victoria and Kelowna as markets here. That was a test that came in last summer from WestJet when they had some capacity, extra capacity they needed to deploy. Those markets did not return this summer, just due to the incredible demand that we've been seeing this summer, and WestJet's need to put those aircraft elsewhere. So even though they are captured on this map, those are routes that were not served previously and are not served today, but were served last summer. In the US, which is again what we're really here to talk about, we have 3 routes that are currently not recovered, which includes Minneapolis, Delta, that nonstop hub flight that we're talking about, and Vegas and Orlando. The only US nonstop route we have recovered since the onset of the pandemic is Phoenix, which came back into the schedule very late in 2022 winter season. I think they were only operating for about 4 or 5 weeks. So that was our first kind of celebratory launch back into nonstop US service from Saskatoon. Mexico, Caribbean, that looks a little bit different too. You can see there's still quite a few missing there. We did have more of a robust program with Sunwing than we were initially expecting, so we're very happy to see that. We did recover Cancun, Puerto Vallarta, Veradero, Ixtapa, Punta Cana, but there is still several that we do need to recover. So these are kind of where our focus areas are for recovery when we talk about our planning on air service and air service recovery. Zooming in specifically to look at Delta, and this is where things get very interesting. And forgive some of I had to kind of go over some of this map because it had changed since it was originally put together. So forgive kind of some of the childish drawings on it, but this is taking a look at how Delta has recovered in the Canadian market since the onset of the pandemic and their almost full withdrawal from the Canadian market. So they had originally 23 nonstop destinations that they were serving back in 2019. Those are all captured there on the side. And since then, they have recovered 17 of those markets. There are some key ones, ourselves included, that have not been recovered. For Minneapolis, both ourselves and Edmonton do not have service that we previously had service to. So that's an important one to remember. Edmonton is a much, much larger market than we are, and they currently do not have Delta service. Winnipeg recovered their service, but Edmonton has not to date. Atlanta, they're not flying to Montreal. Detroit, they've not returned service to Ottawa. New York has not returned service to Ottawa. So Ottawa is another market that has not returned to any sort of Delta flying at all. Again, a much larger market than us in terms of just overall market size. And Montreal, New York has not recovered. So Delta is not fully recovered from a Canadian perspective. We are not the only ones that have not yet received that recovery of service with them. So this is what we're up against. We're up against, are they going to relaunch Saskatoon over Edmonton? Is there enough to do both? And just really trying to wrap our heads around Delta's recovery strategy. And we'll get into a little bit about what are the things that Delta is really looking for to make those very critical decisions. And this is where we're sitting from an overall recovery perspective. This is some newer data we were looking at just recently. As you can see, we were looking at it just as early as April 2022. It's where we sit domestically in terms of overall seat percentage, recovery of seat percentage to where we were in our baseline year of 2019. So looking at where we were in April 2019 for overall seats compared to where we are this year for overall seats in April. And as you can see, we do rank quite lower on the bottom there. So we are 53% recovered, where some of our counterparts in a market like Montreal that is a much larger hub, they do a lot more European flying. They have almost 80% of their seats already recovered. One thing I will note is that I'm not going to get into this here because it's not specifically relevant to Delta, but our seat capacity trends do show that by August, we'll be up there with Montreal as well. We will have recovered about 80% of our seats come August. April being a shoulder month for us, our some stuff has dropped off. Our summer schedule hasn't quite picked up yet. April isn't the best benchmarker, but just wanted to showcase really where the entire country is sitting in terms of seat recovery. A lot of us are sitting around that mid 50% recovery range, where other airports are a lot stronger. So it's important to kind of note that we as airports still have a long way to go in order to recover where we were pre-pandemic. So we're going to talk a little bit about Transborder specifically. Transborder is just another name that we use in the industry for the United States. So if you hear anybody say that, they're specifically referring to the United States. It is treated separately from the rest of international, just because they have different rules, they have different screening requirements, things like that. So we actually separate it out as a completely separate market when we talk about Transborder versus international. So this is Saskatoon's Transborder service, historical service, going back to 2008 and ending at 2019, so just before the pandemic here. So it doesn't show Delta falling away or anybody else falling away in 2020, but we've kind of already walked through that story just in the last few slides here. This just really shows how things have come and gone over the years and ebbed and flowed. As you can see, United had a historical habit of adding and subtracting and adding and subtracting. So that's Delta, United, you can see how they fluctuated quite a lot until 2015 when they have fully left the market. At that point, Delta was the only other non-Canadian, or they were the only American carrier continuing to fly nonstop to a hub service. And they have stayed relatively consistent in the market, especially with their merger with Northwest. So they have been very stable in the market here in Saskatoon. They've been a long-term committed partner. And so we do have a lot of data and a lot of community interest and vested interest in this flight that does go to benefit our future business cases with them. Taking a look at that transborder market, when we talk about market share, I think it's really important for everybody to understand how many people are truly traveling between Saskatoon and the United States or anywhere in the United States coming to Saskatoon in any given year, month, day. So this is looking at the top 15 largest transborder markets. So Vegas, Phoenix, Los Angeles. Again, we have that Minneapolis-St. Paul, Orlando, New York. So you would have seen some of that. But the important factor here is something called a PDU, which is passengers per day each way. So how many passengers are flying from Saskatoon to somewhere in the United States every single day? And that's what really matters to fill those seats, because you need to know how many people are going to fill that seat every single day for that flight to be profitable. So when we look at kind of the summary, and we've got it here split between East and West, because different hubs serve different markets. You know, an Eastern Toronto will serve the Eastern passengers, where, you know, Vancouver might serve more of the Western passengers, or Calgary. The total number of people traveling each way between either Saskatoon and the United States, or the United States and Saskatoon, is just shy of 400 people per day each way. And so why that number is important is because when you split it out between those 4 hubs that we talked about that serve the US, being Calgary, Toronto, Vancouver, and Minneapolis, you get that kind of split. You have 4 different hubs all fighting to serve that 400 people every day. And again, this is in a good year. This is in our 2019. This is a base number. That's not today. That's as good as it's been, as good as it can kind of be. So you got 400 people traveling per day on one of these 4 routes, or trying to get through one of these 4 hubs to get to the United States, or vice versa. And if you remember the slide I had just shown where it shows the percentage split, MSP, or Minneapolis, so the Delta hub, took about 32% of that in a day. So when you take a look at that, that kind of equals about 100, let's just round up to 130 passengers a day that are potentially traveling on Delta to Minneapolis to either be destined for Minneapolis or to travel beyond. And that's a really important number to remember. So we have about 128, 130 passengers potentially a day that Delta is able to capture. And that's in a good year. So now let's talk about Delta specifically, keeping some of those numbers in mind. So this is the business case that we currently have out to Delta. So of course, we have been continuing these conversations with Delta all through the pandemic. We've been keeping a really close eye on the data, on the stats, trying to understand where this route fits into our network, into our recovery, where we fit into Delta's recovery. We've been working with our partners, which is a consulting firm called Intervistas that does a lot of our data and market research for us. And this is the business case that we have come up with. This is the proposed route plan that we've come up with that has been presented to Delta already. And so this is essentially a recreation of the service that was already there. You can kind of see the timings at the bottom there, but essentially it's 2 times a day on an E-175 aircraft, which has about 176 seats. So that's 152 seats per day. Delta has the opportunity, which I had just talked about, to capture up to 128 seats, or 128 passengers a day to fill those 152 seats, which equates to somewhere around that 80–81% load factor, which is a good load factor. It's not a weak load factor. It's pretty good. Anything over 80%, anything over 80% with the aircraft being full is considered healthy. For the most part. So that's a good load factor, not disappointed in seeing that. That is something that we can achieve. So 2 times a day service on an E-175 aircraft with 76 seats. So that's really what the business case shows that we would be able to achieve. One of the interesting things here I just wanted to highlight is that 18.3% of that is what would be considered local traffic. So that's somebody coming from Saskatoon destined for Minneapolis, or vice versa, somebody from Minneapolis destined for Saskatoon. So 20%, that's actually not too bad. That goes back to that kind of market creation that I talked about, that this route has actually created that 20% of people who probably otherwise wouldn't have gone to Minneapolis, but now might go for shopping or for other reasons. But 81, almost 82% of this flight on average is people connecting from either behind Saskatoon, going to Minneapolis, or more likely connecting beyond Minneapolis or behind Minneapolis to get to Saskatoon. So that's just an interesting thing to note, that, you know, it's a very high connecting flight. Most of the people, 80+% of people on that flight, are not destined for Saskatoon or Minneapolis. They're either going behind or beyond that route. Here's where things get a little bit more interesting. We talk about what's important to Delta. What is important to Delta to look at when they consider returning to Saskatoon? There's a lot of things on their plate. They've got to evaluate a lot of things. We presented this business case to them. We want them to come back flying 2 times a day on this E-175 aircraft. We're telling them that their loads are going to be 80%, which is great. That's 80% of the aircraft is full. Why wouldn't they be happy? Why wouldn't they be thrilled with that? And this is where things start getting a little bit more complicated, or where they're having to take a closer look at the numbers. This is a metric. It is called yield, that airlines and airports use to evaluate the performance of a flight. And really, when you're talking about yield, what it is the total revenue generated by the flight divided by the passengers times the number of revenue miles. So essentially, it's just saying how much is one revenue for one seat making me per mile when an aircraft is flying on a route. And so this is a very common metric. It's a way to break down the profitability of a flight to be able to compare it across an airline's network. And I just pulled this from the Q1 2022 financial results from Delta, which shows an average passenger mile yield in cents, US cents, of 17.85. So that's what they expect to be hitting on average across their entire network globally. The Saskatoon flight, historically, you can see on the left where our yield has been sitting. 2016, well under that at 13.6 cents. In 2019, we were doing much better at about 16.8 cents. So we're getting a lot closer to that 17.8, 18 cents that they're really looking for. And we did see some good growth, so about a 72.2% from 2016. So we were heading in the right direction. Our yields were improving. If you remember, United dropped off in 2015. So if you can take a look at these yields, you start to understand why United left the market. The yields were just nowhere high enough. They just weren't making the revenue they needed. Delta stuck with us. They continued to invest in the market. They continued to prove themselves, develop that market, and the yield started to grow. It was heading in the right direction. And then the pandemic struck and they chose to leave the market. And so now this is the historical information they have to go on. This is the historical information they have to make that decision on. So they're looking at that 16.8 that we achieved in 2019 and saying that it's still about a cent short of where they need it to be comparable to the rest of their network. So that's just one metric they're looking at and evaluating when we're talking to them about our business case. Here's some other challenges that I think it's important for the community to know and understand that we're facing when we do talk to Delta about a return. The E-175 aircraft, which is the aircraft that we were previously utilizing, it is the aircraft that is proposed. It is the right fit for a market because, again, when I talked about Delta's potential opportunity to capture market share is about 130 passengers a day in a good year, give or take. That's the right fit for that aircraft. If we go any higher than that, that load factor starts to fall off and we're no longer hitting those 80% loads that are required to make sure this flight is successful. So the E-175 is the right fit for this market. It's the right aircraft. Delta has 71 in their fleet right now with 16 on order. Those 16 on order are set to replace their retiring CRJ 900 aircraft, which is not the right fit for this market. These aircraft are wholly owned and flown by a company called SkyWest. They fly on behalf of Delta or Delta Connection, which is the regional carrier. They do all of their Canadian flying. So SkyWest is the single operator for all of Delta's Canadian operations. The important thing to note is that SkyWest's fleet since 2019, since the onset of the pandemic, has been reduced by 25%. So in 2019, they had 199 aircraft. Now they only have 149. And we are all of these Canadian markets, plus others, they don't just fly for the Canadian market, but we're all fighting for this reduced number of aircraft with no significant plans to increase this fleet other than the 16 aircraft that are on order that are already set to replace a different type of aircraft that is not the aircraft that we are targeting. So that creates another challenge. We talked about load factors and yield. The Delta network on average, again, if you look at what their 2021 average load factor across their corporation, across their network globally was 83%, which is higher than the 81% that we're forecasting. So even though 81% is a good load factor, they're doing much better in other markets so that their average is actually 83% across the network. Again, we talked about this already, but Delta's network averages 17.85 cents yields in this last quarter, and we're below that by about a cent. So, and that's in 2019. So we have some work to do to prove that there is growth and opportunity in this market and that it is worth the risk in taking one of these very limited aircraft and putting it back in Saskatoon instead of putting it somewhere else. Pilot shortages, I'm sure you've heard about this as well. This is a quote from CNBC just in May this month. The United States is facing its worst pilot shortage in recent memory, forcing airlines to cut flights just as travelers are returning after more than 2 years of the COVID-19 pandemic. Delta is not excluded from this. SkyWest specifically is having challenges with this. They cannot get pilots trained. They were not offering as much training over the course of the pandemic. So not offering training overlaid with retirements has created this backlog and need for pilots in a very similar way to what you see going on here around the lack of screening officers, just creating this backlog. The same is going on in the United States from a pilot perspective, and SkyWest, who is the regional operator for that Delta route, has been very severely impacted by this. We're still suffering with US border testing and border restrictions. So you are still required to get a COVID-19 test to go into the United States. On the flip side, there is still random testing at the main 4 airports in Canada. So those, you still have to be vaccinated to fly, get on an aircraft here in Canada. So there are still a lot of restrictions in market that continue to suppress the market and suppress foreign airlines like Delta's interest in entering the market until it's completely opened up. It's really difficult for them to make those decisions. And then the last piece is really around seasonality. Obviously, we have seen that the strength in the summer market is quite strong. That shift in percentage, it's quite strong, but it's a weaker winter performance overall for Delta. And what we talk about, we're talking about year-round service. We don't just want 6 months. We don't just want 3 months. We want the consistency of double daily, year-round service. And that can be hard to do when one of your seasons is stronger than the other. We know our shoulder seasons are quite weak. Our winter performance is quite weak. It's 12%. It's forecasted to be about 12% lower in fares. Load factors of only around 77%. So again, when you're trying to hit those 83% loads, it's a little bit on the low side. So those are some of the challenges that we are dealing with when we're talking to Delta. So looking ahead, where are we going with this, with all of this information? So despite some of the challenges that I posed to this group, and I wanted to pose that really just more as an opportunity to educate really what we're facing when we're talking to Delta about a return to market. We do still have a strong business case. You've seen the loads are good. Our yields were headed in the right direction. The forecasted yields are pretty close to what we think they need to be. So we have presented it. We have got really positive feedback. The feedback that we have got from the team at Delta is that they do intend to re-enter the market. The timing just needs to be right. So it's really trying to pressure them into, okay, well, what is that timing? Let's make a commitment. Let's commit to that timeline. Our next meeting with Delta is scheduled to be on June 14th. So I will be flying down to meet with them, present the updated business case, really kind of dive into some of this data, trying to get some more information shared to them. We're going to backfill some of the information we've already shared with some information provided for some of our other partners. The Outfitters Association, which is obviously a huge driver of inbound tourism. They were a big utilizer of this flight, has done some excellent market research that we're going to take from some of their data. But again, that's only one piece of a much larger pie. This one component of driving inbound tourism for the Outfitters is just one component of this year-round market that we really need to be talking to them about. We have promised support from the government of Saskatchewan, so they've really committed to helping us offset some of those costs. Obviously, that's all still needs to be negotiated, but they've really stepped up to the plate in the past to help make that connection and draw that service in. We've been in talks with Destination Canada, our partners, and Tourism Saskatoon as part of that to look at leveraging some funding that's come through from the Government of Canada through that tourism arm to support air service development in Canada. So we're working with them on trying to gain some additional funding. Obviously, our partners at Tourism Saskatoon have been great support. And what we're really looking at is the earliest possible is this fall for a start, but honestly, to be quite honest, likely into 2023 as we're dealing with a lot of these fleet challenges, pilot shortages. There just isn't a lot of availability for them to trigger things very quickly. So more likely into 2023, but we're certainly going to keep pushing for this fall. And one of the questions I get asked a lot is, what can you guys do to help? And there's a big desire to help, and it's a complicated thing, and to try to understand what is needed. Really, what it boils down to is I don't believe that that dollars are an issue. I don't think that that's really what Delta is looking for. In fact, they've kind of said that in the past, that it's really comes down to that the flight has to make sense. It has to make sense for them to do that. And so for me, data is the most important, and filling those gaps, filling that knowledge that I wouldn't know as an airport, that the airline wouldn't know as an airline. And so if you're listening and you know that this is a flight that your organization or you personally have used a lot in the past and that you rely on this flight to do business, what we really need from you is data to support that. You know, how many flights did you take last year or in 2019 when that made sense to do so? How many did you use in 2019? What's your estimated utilization of that flight going forward? What was your split between, are you buying economy tickets or business class tickets? Is there seasonality in your travel trends? This is what really, this is the type of information that really helps beef up our business case, and gives them that more of that tangible information to make these decisions, because these decisions are, you know, multi-million-dollar decisions, and these aircraft alone are obviously $100 million investments into a market, and so they need to make these decisions with as much information on hand as they possibly can. And you would be surprised how much of this community type of information they don't have access to. They just don't know. All they can see is the numbers on the page like we can see them. So any of this information, the supporting information, would be incredibly useful. So please do reach out to me if that is something you think that you could provide. So that is it for my presentation. I know I kind of went through it quite quickly, but I just wanted to make sure I was able to hit on all the key points and leave plenty of time for Q&A. So I don't know if you're going to be able to help me moderate there, Margot, but I will open the floor up to any questions if there are any at this time.
Thank you so much, CJ, for that in-depth overview. It was extremely helpful. As CJ had mentioned, if anyone has a question, please indicate it in the chat, and we can get through your questions there. Why don't I start us off with one? I had a bit of a general question. You spoke a bit about the hub airports. So we know our airport system is a little bit designed on a hub and spoke model. So what conditions would have to exist in Saskatoon to get us to a more prominent hub airport status?
Yeah, great question, Margot. I think this is something that comes up a lot. And I think there's a little bit of a misconception out there that we can just become a hub, and really there isn't a lot of truth to support that. I mean, our market size just isn't there. If you look at where the largest hubs in the world are located, or even smaller hubs, their population size is just, it supports that, because it has to support that initial base of local traffic to then attract airlines to come on top and build more of a hub. So for us, you know, we've over the past several years have really tried to double down on our education about being a one-stop market, a one-stop hub. If we can get to anywhere in the world within one stop, we're punching way above our weight class in terms of our market size. So that's really the piece that we've been trying to market for the past several years, that you can get to the other side of the world within one connection. And that's where connecting into these large hubs like Minneapolis that do serve a lot of additional markets really comes into importance. And it's you know, why we prioritize Montreal over keeping Ottawa, because their ability to connect to all of these secondary European markets within one connection is really what sets us apart, especially for a market of our size. So we will always be a spoke, at least in my lifetime, we will be a spoke in a wheel. But if we can connect to anywhere in the world within one stop, that's really what our goal is. And our long-term strategic plan around developing air service has always been to grow those one-stop markets. You know, we went from something like 231 one-stop markets to 270. And so where can we grow that into the future so that you can get anywhere in the world within one stop? And so that's really where the strategy lies in terms of connecting into those hubs and spokes.
I think that makes perfect sense. Like you said, it's not like we will all of a sudden grow to be the biggest hub airport, but it's interesting to know that there are ways to kind of get that way, or at least have lots of connections, like you were saying. So
absolutely.
As people are hopefully putting some questions in the chat, I have another question for you. Where do you see the greatest prospects for growth for passenger volumes? Do you think it's on the leisure side, the business side? You know that we've had such an uptake in online meetings during the pandemic, and you know, as we start to recover here. So do you expect demand to return for the business travel side of things, or connecting with clients or consumers kind of in person? Do you expect that to change and to increase volumes?
I think that's yet to be seen. I mean, we've received some preliminary data from some of our partners within the industry, some of our market research partners within the industry that you know, claim that 20% of that business traffic will just not return, that there's just a 20% loss in business traffic across the board. And that's what we should expect and plan to That's a pretty big number when we're talking about things like, business events, and even from our market, business class, the utilization of our lounges. That's a big percentage. So I don't know that we're quite ready and willing to accept that it's going to be a permanent 20% loss. I think that there's, more to be seen as time goes on. Maybe people will get tired of this virtual thing. Even myself personally, I'm starting to get back onto the road with traveling for work. So I think it's yet to be seen. I think we are anticipating that there will be some percentage of permanent business loss. Will it be as high as 20%? I certainly hope not, but that's sort of the indicator we've been seeing. So there's certainly opportunity there to develop, get back out there with business travel, like you talked about, with working with our tourism partners around marketing of business events and conference events to try to drum up that interest and get people traveling for business again. So that's certainly an opportunity for development. Right now we're so early on in our recovery phase that, it's honestly just been in the past month, 6 weeks here since Easter, that we've really even seen a return to that leisure travel. So for us, it's just about making sure that our passengers have the options to get to where they need to go, primarily domestically this summer, and then building beyond to US and some of our sun destinations, and continuing to build on that from the leisure perspective.
Thanks, CJ. We got a question in the chat here from Mr. Todd Brandt. Can you share any results from the Outfitters research as far as the expected return of the US market?
Hi, Todd. I don't think that I have the ability to share that information yet. I just received it from them last week in terms of their market research. I believe that they will have more to share with their partners as time goes on. The information that I've seen is, that they were able to provide was really more around their market size. It wasn't really around predicting the recovery of markets. It was more information that really helps us beef up our business case in terms of, how many of the total Outfitters passengers were taking the Delta flight, what were their routings. One of the really important questions that was asked, that was something that I had chatted with their market research team about at the beginning of all this, was if that flight doesn't exist between MSP and Saskatoon, how many of you are likely to find an alternate route? So flying through Edmonton and then taking a private plane or driving, or how many of you are just going to stop coming altogether? And the results of that question were very interesting, because it did show a high percentage of Outfitters that just said, no, we won't come to Saskatchewan at all if that flight doesn't exist. So that is a highly motivating piece of information. It's a real trigger for airlines to know, okay, there's a certain percentage of population that just, or a certain percentage of this group of people that just won't fly with us at all. They're not going to come through our Calgary flight. They're just not going to come. And so that's a loss of that opportunity. So that was really more what their research was targeted towards, was really to help us understand some of the data behind what makes up the Outfitters and access into the market. So they didn't really talk a lot about timings, but it's certainly information that's going to help us in presenting our business case to Delta.
You spoke also about some of these changes. So we're seeing, leisure travel coming back a bit, business travel, we're unsure exactly what's happening there. But do you see any changes or improvements to the airport experience in the wake of COVID and the pandemic, or is there new, passenger expectations for air travel?
Oh, absolutely. I mean, I think this from day one, this was something that just all airports had to change gears very, very quickly. I think the number one thing that was of concern to passengers traveling through the airports, based on some of our industry surveys that we had conduct all the time between both, nationally in Canada and globally, was really around services and access to amenities and access to parking. And those were really the important things. And then very, very quickly that changed to, oh no, I want my airport to be sparkling clean. I want to know that everything that I'm touching has been sanitized. So it's really been this dramatic shift towards health and safety and prioritizing that, as we have all done in all parts of our life, but really from an airport and airline perspective. So that's certainly changed. Those expectations and how we look at the passenger experience has changed. We're moving into a lot of leveraging a lot of technology to accommodate that change in passenger behavior. So moving away from a lot of face-to-face interactions to more touchless technology. So, you can check in on your own personal mobile device that only you have touched. You can drop your bag at the self bag drop without having to touch anything. It just, scans your boarding pass and away you go. So just moving through these touchless experiences and leveraging technology to ensure that we're giving passengers more control of their experience back. And so this is a theme I think you're going to see not just here in Saskatoon. It's certainly something we're adopting, but globally, anywhere you travel through the world, at any airport that's trying to really enhance passenger experience, this is one direction that they're certainly going to be going, as more control around giving passengers control over their experience.
You're absolutely right. That's something that we're seeing already, and hate the word pivot. We've used it so much, but people pivoted so quickly, and that the airports were absolutely one to make some huge changes quickly.
Yeah, absolutely.
So last chance for anyone to get a question in the chat there. And just so everyone knows, the PowerPoint will be made available through our check-in, as well as recording of today's session. Well, thank you, CJ, so much for your insights this afternoon. We really are eager to hear more developments on Delta in the months to come, and service coming back to Saskatoon and to Saskatchewan. So thank you very much. So thanks for everyone else for joining us today on our open membership call. Visit our website or follow us on social media and check out our latest on our check-in. And hope you all have a wonderful rest of your day. Thank you so much.